in markets where you have less um, less liquidity, where you can just go chase growth and stuff like this,
Hmm.
with rising rates, interest rates. You know, having the Federal Reserve indicate that they were raising rates this year is kind of like um, one of the reasons among many last year that I was like, expect commodities to be a winner, like physical goods, like growth stocks would be, you should expect that they're going to fall. And I believe NASDAQ has fallen about 30% since then.
Oh,
So
wow.
it's just, it's, it's, there's just understanding how the market mechanisms work. Like I think if you look at like the most successful hedge fund traders and stuff like that, investors, they understand the market, how it works. They um, manage their risk, and they really like understand that this is kind of the machine that plays out over time. So if you know like how the machine works, you're going to understand what the machine's going to run over essentially. So it's just
So just tell me how the machine works really quick so that way I can just make a few $1 billion. I'm not being greedy. I've got about $20 I can spend right now.
well, in recent year there's been like a really high correlation between money printing, like the level of liquidity that because the Federal Reserve was basically printing money and then going out and buying assets to put on their balance sheet. And I believe it was like zero point 0.8 or zero point 0.9 correlation, where one is a perfect correlation, zero is no correlation, and -1 is a perfectly negative correlation. So at zero point 0.8 or zero point 0.9, it's like every dollar that they put out, you expect the assets to rise by, times zero point 0.8, that level essentially.
Oh, wow.
So, or like, yeah. So it's just there's a really tight correlation, and if you there's a basically Case Shiller, there um, there's a home price index that they've been doing for a long time. Robert Shiller won the Nobel Prize for it, and it basically uh, tracks home prices nationwide by a bunch of factors, and there's a whole index to it. But he also has this exponential growth model for the stock market, and when he plots it, it basically goes like this, right?
Hmm.
And then you track the S&P, and the S&P goes on either side of it. I think by what he projects right now, based on that, is a fair value for based on the exponential growth model for the S&P 500 is about maybe like 3,200 or something like that, and we're still trading at I believe 4,000. So it's I mean in many ways the Fed broke the market in recent
Right.
years, and their actions led money to be allocated to something for a lot of things that weren't didn't really add a lot of practical good. Um, so it's interesting, and now they're raising rates, and it's crashing the market, among other things. But
Yeah, I like the term managing risk because that's probably what I want to definitely just say that whatever you're doing is risky. And that's even spending money at McDonald's, but maybe for a different reason. But what we do with our money and stuff, I mean, I'm always surprised, and it's not necessarily in the money realm, though I'm sure this fits. People do something and they don't see the consequences immediately. So they do it again, and they might even be told, "Hey, what you're doing is unethical or it's causing a lot of harm." but there's not a penalty. So they keep doing it, they keep doing it, they keep doing it. And then what happens is they don't get stopped by a police officer. That would actually make it almost easy. Something else happens that just completely ruins it. So they crash into a tree. Like if they're speeding all the time and they go higher and higher in speed, it's not that a police officer pulls them over for speeding. They hit a tree and, wreck their car. And then they're like, oh, life's just not fair and stuff. I always get the bum into stuff. And I'm like, well, you also, like, we're going 165 miles an hour.
Ranking. Yeah.
And that, if you spend money and you're not understanding what you're spending money, like I always kind of had the thing, if I speed, I'm willing, if a cop pulls me over, I'm willing to pay the ticket. I'm not going to argue it in court. I'm not going to try to find a way to beat the system. If I was speeding and I get pulled over, I completely accept that every time I speed in public. I don't expect anything to happen other than that. And if it doesn't, then wow, that's nice. But but every time I expect the worst thing to happen in that regard. And I think that's kind of how you have to expect when you're getting into something that's volatile like Bitcoin. Not that it's bad. Again, it can be very beneficial. NFTs, all this stuff we've been talking about, whatever's going on with Twitter right now, which maybe we should talk about that too. But
Yeah.
I think it's always good to be one of the first people, maybe not the earliest adopter, but an early adopter, and jump into stuff. But understanding that, a good chunk of the things that you might jump in might not be around. I mean, we don't talk about Periscope anymore. We don't talk about.
Well, that's because they got bought.
Yeah.
They got
Oh,
bought by
I know,
Twitter,
I
I
know.
think.
But we don't talk about them in the same way. We like, oh yeah, Google Wave, which actually was it was a very cool product. We've mentioned Google Glass before in the past, but Google Wave was way ahead of its time on so many different things, especially for the way the communication works between people. The closest thing I've seen to it is probably what Slack kind of offers right now, but it doesn't offer it in the same, like you can go to a Google document and you can have multiple people editing it at the same time.
Yeah.
But in Google Wave, it was in real time. And it was a very cool way to be collaborative with somebody else on projects. And that was when I didn't even have projects to collaborate on. Like I can just imagine if there's a product similar to Google Wave now, working with you on the new Next, just kind of what that would allow. But it created some opportunities for Google to change up how they did some stuff later. But people don't talk about it anymore. People don't talk about the old fashioned payphones except in reminiscing about what they were. And so it's just remember, whatever you spend your money on, whatever you spend your time on, it might be a complete waste. It might be great.
Yeah.
So going outdoors and playing might be good, but you might die of skin cancer. And you stay inside and don't ever go outside, well, you might die of loneliness. I don't know.
Well,
I'm going morbid here.
if you have a strategy and you understand what you're doing, you can manage risk. And if you look at like good gamblers, like the people that win poker tournaments and stuff like that, they understand risk, probability, and strategy. They just don't have the ability to buy like hedging contracts and offsetting positions to manage the risk on stuff. So it's it will be interesting to see what happens. Like, I think a lot of stuff is being really mismanaged at our government level, and the Federal Reserve is not technically the government either, but they should have raised rates years ago, and they didn't, and they waited until a point where the economy was essentially contracting and raised rates. And a lot of people would say that they crashed the market. So
how long ago should they have raised rates approximately?
2000, well, like when Obama was around, 2017 also.
Okay.
Would have been a good time. Pretty much any time. Like I think even during COVID, like there was I think the people that were most afraid about COVID were elected officials, like, the sky is falling stuff. Not to
Right.
say that it wasn't like a horrible health crisis, but um, they overdid a lot of stuff. And, like I mean, a lot of that money that was sent in block grants to states and universities and stuff like that hasn't even been spent. So it's just like, you know,
Oh, believe me, I know.
what's the point, right?
Yeah, and without going too much, I know my job is one that's received money, and I'm still in charge of spending some of that COVID money. But what we can and can't spend it on, the price dropped on a lot of those items. So sanitizer, or yeah, we'll use sanitizer. It might have been $5 a 20-ounce bottle 2 years ago. Um, it might have been just a little bit less than that a year ago. Well, now I'm making up a number. This is not the exact price, but it might be 50 cents a bottle now.
Yeah.
Well, I have to buy 10 times the amount of bottles just to get to the price it was 2 years ago. And if you have $1,000 to spend, um, that means you have to spend 5 times as much on sanitizer, and now you have these abundance of sanitizer that you don't really need. And
Yeah.
so yeah, there's just mostly agreeing with what you're saying, but in a way
Yeah.
that actually affects me in my work.
There was a term that was being thrown around, which is never let a good crisis go to waste. And uh, that perspective led to a lot of overspending
Hmm.
on stuff that I I don't know how to fix it, but we really got to get better at managing our economy, how we spend money, because there's a lot of better uses for it, and it seems like, yeah. So it's the effectiveness of those dollars spent is just not
Yeah.
like I felt when I lived in the Netherlands, like they had higher tax rates, but they spent that money pretty wisely. And it wasn't just, kind of like that YOLO, you only live once sort of philosophy.
Hmm.
So,
Well, there's a lot to be said that how you spend your money plays a bigger part more times than how much money you have to spend. Though we generally like it when we get more money to spend.
yeah.
But yeah, I think, and I think I mean, that's probably the American dream right there too, right? Just as you get more money, learning how to spend it in wise ways, not in ways that you spend it like when you were poor.
Yeah.
And I'm not talking about the quantity of stuff, maybe the quality and some other things. Um, so I know I didn't prep you on this, so this is probably the thing that gets deleted. Every time I say that, though, nothing gets deleted. So,
Nothing gets deleted.
or nothing gets aired. Maybe I should say it that way. So we mentioned a few episodes ago. I think in episode 8 we mentioned as well that if you ever have questions or anything, then feel free to contact us. And if you're friends with us, you don't have to go through the proper channels. You can go through the proper channels like texting. Well, my friend Aaron, who we mentioned in an episode, I think that got posted uh, about a week ago. Uh, he was mentioned talking about just how he was listening to the show, and before he even realized he was on the episode, he sent me a text and he said this. And Matt, this is a question directly to you. How is Matt so smart? You, Mike, fire off hard questions to him, and he seems to know so much. Even questions like how much salt is in ocean water. So, Matt, how are you so smart?
It's embarrassing. Maybe this will get cut.
Yeah, this will get edited. Nope. This is a question from our fans that has to be posted.
Well, thank you, Aaron. I appreciate it. So I just like talking about this, and I'm glad that you enjoy us talking about this, because I do think Mike asked really good questions. I enjoy talking about it with him.
Yes, Mr. Humble over here. So you have a bachelor's degree in what?
Financial economics,
And
and
where'd you
then
get that degree from?
Western Washington.
Okay. And then you went to the Netherlands to get your master's degree.
Yeah.
Is that in Mary Poppins, Masters of Mary Poppins?
I did economics and did um, basically focused on monetary policy and financial market measurement methods.
Okay. And about how long have you been in the finance industry?
So I worked on finance for what I think about like 4 years, and I worked in the energy industry for about 10, energy and finance, I guess, and and then I worked in maritime industry for a long time. So, but I've been really interested in finance since like age 12.
Mm-hmm.
That's when I really got into analyzing stocks, building models, and stuff like that. So, doing data stuff. So I love reading about it. I love talking about it, and it's it's a lot of fun. I don't get to do it enough.
And I believe we talk about a lot of this stuff in greater detail in the Nobody's a Nobody podcast episode where you're the guest, where we talk a little bit more about some of your background of how you got interested into finance specifically, and how your journeys as a young businessman working for your family's business kind of led to some of these discoveries. So I'm definitely doing a plug here for that episode because it is an amazing episode. In
Thank you.
fact, one of my good
I
friends
enjoyed it.
mentioned that that was probably his favorite interview so far, and I value that person's advice. So, Aaron, thank you
Who
so much for this question.
who was it? I'll send him a gift.
Rob Trotter.
Oh yeah.
So Rob, I hope you're listening. If you're not, you don't get the, you have to mention to it our text group, Rob. That's
Yeah,
the only way that you're going to get that gift.
totally.
But feel free to continue to send us questions or insights that you would like us to, you'd like to talk us to us about. Matt is Matt at pearsalltech.com, and I'm mike.w.mcveigh at gmail.com because I didn't pay for that Gmail to get changed. I'd say where you can text me, but if you can text me, you already know that. But thank you, Aaron, for that question. Matt is extremely smart and
It's
on
embarrassing.
so many different areas that aren't even covered on this podcast or any other podcast so far.
Huh.
He's also, just so you know, a champion speaker, an off the cuff speaker. It's called Table Topics, but I like the term off the cuff because he is very knowledgeable and is able to bring information at kind of a thing that most of us might take a few hours to prepare for. He can get to that very quickly, which is makes it great for the podcast world. All right,
Thank
now
you.
to go to the other area that we were going to talk about, and he really is uncomfortable right now, so that's what he gets. Some for leaving the part about my cat in that one episode, where I had to go get my cat. Um,